My name is Vandell, co-founder of Black Swan Capitalist. So in this video, I just need to explain something. There is a huge misconception about whether we're in a bear market, a bull run. Is the bull run not coming? Is it over? What's happening? A lot of confusion out there. So I'm just gonna explain it in simple terms, simple, easy to understand English. So first of all, you gotta understand, for over a decade, ladies and gentlemen, we have had the 4-year crypto cycles, and that's pretty much been the backbone of crypto investing for most crypto investors and enthusiasts. And it's a pattern that's so precise, like clockwork. You get the bear market, accumulation phase, expansion, and then you have this euphoric bull run, which is the top of the bull run, and then the cycle resets. Very predictable, almost too predictable. Now, here's the thing. There are a lot of people out there saying that the 4-year cycle is dead, that the legendary cycles are 100% over, that the old rules don't apply anymore, that institutional money, macro shifts, and regulations have completely changed the game and pretty much thrown off the rhythm of the standard historical 4-year cycle. And around now, probably online, on Twitter, on X, on social media, you've probably seen a bunch of posts, and people saying and claiming that this anticipated bull run that we've all been waiting for is over. That's what people are saying now. And it's funny because who's pushing these narratives and saying that? It's actually the same people who just a few months ago were confidently predicting Bitcoin to hit 250,000, saying it's going to 1 million, and the same, experts that were saying the biggest bull run ever is coming. And these are the same people that did a 180. The mainstream talking heads, the notable figures and influencers, these are the same people that were saying the best is yet to come and now it's over. Well, guess what? They're all wrong. And I'll tell you the truth. Is the 4-year cycle really dead? And maybe are we just too zoomed in to actually see the bigger picture? And the answer to, is the 4-year cycle dead? The answer is no. Are we too zoomed in looking at the micro details that are irrelevant in the grand scheme of things? Yes. So I'll tell you right now, the cycles are not dead. The answer is no. The cycle hasn't broken. It's just evolving. And once I break this down, you'll completely understand how liquidity moves through global markets, so that you could see exactly why history is actually repeating itself. And yet again, even though we are in somewhat uncharted territory, I will acknowledge that, you'll still see how history is repeating itself, and you'll better understand exactly where we're headed next and why, most importantly, we are still in a bull market and the top has not come yet. So let's just get right into it. First of all, let's start with the foundation here. This is the most crucial thing to understand so that you really see how this makes sense and why we are still in a bull market. So the first thing you need to understand is what drives crypto. Okay, it's funny because 90% of crypto enthusiasts and people invested in this space don't even understand what drives crypto. So let's establish a fundamental basic truth here. Crypto in general, particularly Bitcoin, is a macro asset, okay? This is not an opinion, this is a fact, because it's deeply tied with the global liquidity and debt markets. This is right in front of us. So this is where most investors miss the big picture, because liquidity cycles drive markets. And if you understand how they work together and why they coincide, this will make more sense. So if you understand liquidity cycles, you have a huge competitive advantage that the majority of people in this space simply do not have. And it's unfortunate, but that's what they know, research, white papers, technological stuff. That's irrelevant as an investor in the grand scheme of these cycles. So crypto is tied to the debt markets, and what does that mean exactly? Because crypto has the strongest correlation to global liquidity and money printing cycles, even more than stocks, more than real estate, and even more than gold. So when global M2 money supply expands, which means when it increases, crypto soars. That's a fact. When liquidity and global M2 liquidity contracts, which means shrinks, comes down, crypto crashes. That's a fact. Like clockwork. It's been like that for over 9 years. Now, this relationship has been 100% consistent, and it hasn't changed yet. And a side note is that the global M2 growth actually leads asset prices, particularly crypto, by approximately 10 weeks, 8 to 10 weeks. So it's ahead, and then you see it later in the crypto markets. That means it takes about 10 weeks on average before that liquidity and money actually flows and makes its way into the crypto markets, into these other crypto altcoins and digital assets. Because it takes time to make its way to the corporations, financial institutions, into the economy, and then it goes into the crypto markets. So it's a flow and there's a sequence. So if you know what to watch, then you can actually see the next move before it happens. You just don't know when, but you know what's coming. And that's why I emphasize it's important to know where we are in the cycle, what's happening with the macro factors. Now, why isn't this changing now? I'll explain. Because since 2009, the debt has had to be refinanced every 4 years on average. And it happens to be that the bulk of the treasury debt is due for refinancing this year in 2025. So they'll likely do rate cuts at some point. They'll come up with a good excuse for it. They'll print more money. They'll expand liquidity into the system. And why rate cuts? Why would they do that, even if they said they wouldn't? It's because it would be more affordable for the government to refinance their debt, their interest, at lower interest rates as opposed to higher ones. So they will print money, and to do it, they don't have the money on hand. They have to print it out of thin air. So they're gonna have to come up with the money to refinance the debt and pay the previous interest. So they'll borrow it into thin air. That's credit creation, money creation. Now, most people don't realize this, but if you understand how the liquidity cycles impact assets and asset prices, then you basically have a cheat code that almost 99% of investors don't have. Even traditional general market investors don't understand this stuff. It's like a combination of economics and macro data all put together, and then you combine it with the crypto cycles. So as long as debt refinance cycles exist, which they do, crypto cycles will persist. It's as simple as that. But why? Because crypto is directly tied to the broader debt markets. The two move in tandem. This is not conspiracy. This is real. This is why the 4-year cycle isn't just alive. It's a structural inevitability because it moves with the debt markets. So when the debt markets operate on cycles, which they do, liquidity expands and contracts in waves. They're cycles. Everything is cyclical. And crypto, as a liquidity sensitive asset, which means it has a strong correlation to the global money supply, it moves accordingly. So if you get this, then you understand why the 4-year cycle is a very reliable framework. But we also have to look at the macro data because events happen in sequences. And if you know what's happening now, then you can know what comes next, not necessarily when. It's like a compass to navigate the markets. Now, the second thing, regardless of who gets elected, all these headlines you see, now Trump is in office, that was irrelevant to begin with because money supply always expands over time. You could see it throughout history. Whoever was elected, it didn't matter. And it just expands over time because that's how the debt-based system works. And that's how it was designed from its inception. And it has not changed yet. It probably will in the future.